Okay, so I started by putting together these webinar questions that I've received, which are these ones. What does it mean? Price breaks resistance with clear momentum.
Okay.
Yeah.
Yeah.
And price pullback from previous highs gaining momentum to the upside. I'm hoping to
Mm-hmm.
talk about that tonight on this webinar. Then the other question I had, which was which is the best pair to trade, and the best time to trade, and the average target in pips. Okay.
Yeah, especially the stop loss, because there is no clear indication where to put the stop loss apart from 80% of the previous candlestick of previous momentum. But this can vary 80%. My 80%, my view of 80% is different from your view of 80%.
Yep. Yeah. You're right. That's cool. That's cool. So while we're waiting for him to join on, you want to tell me a bit more about your trading and how long you've been doing it?
As I told you, around 1 year I've been trading, and mostly in the forex. I usually the euro, the US dollar, the common ones, the major ones.
Okay. All right.
And unfortunately, I've been losing, still continuously losing, because it's like exactly. It's like flipping a coin, and it depends on your luck that day. If it's on, it's win, you
Yeah.
get profit. The next day, it's the other side around. I
Yeah.
I think I believe it's just how you choose the right side, the percent your chance of being right. If it is more than 70% or 60%, then that's it. You are on the profit side all the time. But
Yes.
how to get there? It's difficult.
Yes.
It is difficult.
Yes. That's right. And I try with my software to help you and other people, well myself as well. I mean, basically I wrote it because I was having trouble doing that, and I thought, right, I'm going to have to do this. You have to
Yeah.
figure out how to do this because it's hard. And the software basically does as best it can to analyze what's going on in the market and give you the heads up, and then it also gives you trade suggestions. Uh,
I think Ben just joined us. It looks.
do you think we've got another
Okay.
participant here? We've got
Yeah,
Ben in.
because it shows. Yeah, it shows his name, Ben.
Got Ben's name in there, and Ben. Okay, Ben. So can you hear me?
I have. I just realized I can click on the microphone mute and talk. How are you doing, guys?
That's very good. Sounds like we've got a lot of background noise or something going on.
I can take my microphone off and just text instead if that's easier.
Okay. Okay, Talat. So we've got Ben on board now. All right, excellent. So I was just asking Talat a little bit more about his trading and stuff like that, and he was saying how hard it is to stay on the right side of the trade. And
Yeah.
and basically I was saying, that was the thing I was wanting to deal with by writing the software.
I agree.
Yep.
Yeah. Okay.
I,
So so there we go. So Talat, have I kind of answered that for the minute, and we carry on.
Yes. Yes.
Okay. Cool beans.
Yeah.
I go back to the beginning. I'm gonna go through this like as a webinar. Do stop me and ask questions as we go along. If you any questions at all, whatever, that's all cool. And to bring Ben in on this, Talat asked the question here, a reference to my book. What does it mean? Price breaks resistance with clear momentum, and then price pull back from a previous high and is gaining momentum to the upside again. Okay, so I'm hoping to cover some of that on this webinar.
okay.
Yeah.
And then Neil, who's not managed to join us yet for whatever reason, asked the questions: which is the best pair to trade, and the best time to trade, and the average target in pips. Okay, and then Ben, you asked the question: how do you manage stress levels, especially when losing trades? Do you keep trading out of the same session? And how do you alter the 0.9% of the pot? talking about trade sizing. Okay, so
Yes, indeed.
with luck, this I've put together a whole pile of content, and there may be more content than there's time to talk about. Okay, so let's just start, shall we? And you tell me how we're going. Right. The first thing when I'm thinking about how you trade, you've got to have a trading plan for yourself. All right. So what is your personal goal? And that includes things like, when am I going to work at trading? Am I going to trade like on a monthly basis, weekly basis, daily, different trading sessions, time frames, and all that kind of stuff. Now, everybody will have a different take on that, depending on how much time they have to give to other things like day jobs and stuff. So then the other thing you've obviously got to talk about is which assets are going to be the assets you trade, your trading assets. So do you understand what I'm saying about that, or do you want me to talk more about any of that?
Well, regarding the working at trading, is it okay? For example, if you have free time in a day to focus on shorter time frames, 5 minutes or 15 minutes, and then for 1 hour per day, and that's it. If you gain the percent, you would gain it in weekly trading sessions. Or...
Yeah, Tala, that's a good question. My feeling about it is that you can just dip in at any time, but you're less likely to be successful.
Okay.
You're more likely to be successful if you have a disciplined time to trade. Okay, so and the volatility, it tends to, well, it kind of ramps up and then it cools down, and ramps up and cools down, and ramps up and cools down, the volume and so on. So, and it does that around the beginning of trading sessions. Okay, so you need to allocate a time really to trade a particular trading session and say, I will do that.
Okay.
So you have to take it seriously, you have to take it like a business, and you have to allocate the time and put it in your diary, you know, or smartphone, calendar, or anything, and diarize it and say, that's what I'm going to do. All right, so you set yourself a target, you set yourself a plan, and you do it. And if you can't do that, then you're probably better off probably not doing it. You know, it's a hard enough job anyway.
Yeah.
So you might as well try and make it as easy as possible, and the way to make it easy as possible is to be disciplined with when you trade. Yeah, so that's the thing really, is to figure out, you know, am I going to be able to find it easy to trade, say, the European session, which arguably means you need to be free to trade from 7 till 9 or 10 o'clock in the morning. Or are you going to trade the American session, which means you might be free some, say, 1:30 through till about 4 o'clock. Okay, or you're going to trade the Asian session, in which case you need to be free from about 11 o'clock at night through till about 2 or 3 in the morning. Okay, so it's just a choice. But if you can't do that, then you probably want to consider trading not the shorter time frames, but start thinking about trading the daily time frame. And if you're going to trade the daily time frame, you have to trade much smaller lot sizes, really tiny amounts of money, because the risk management doesn't work otherwise. And I'll explain all that bit later. I can explain it all, but basically you then need to be thinking about the daily, and then you need to question yourself, well, when's the best time to think about trading the daily? And the best time to do that is between 10 o'clock at night and 11 o'clock at night GMT.
Okay.
Okay.
Yep. And it needs
Uh,
to be done every day.
it's up to
Or
you, but
is
you might as well do it every day. And a lot of traders say that you're best off looking at certainly Tuesday, Wednesday, Thursday, in which case you'll be looking at setting up to trade on Monday night, Tuesday night, and Wednesday night, because your outcomes are going to happen on the Tuesday, Wednesday, Thursday. And other people will say, well, you can trade the Monday session as well. But the issue with the Monday session is it can be quite volatile, and there's quite a lot of uncertainty out of the weekend. So because of the weekend, that you get more movement, more volatility, more shift, but there's also potentially more uncertainty.
Okay.
And you want to try for more predictability. You want to make money. You don't want to be gambling. You don't want to be just chucking a dart at a dartboard. You want to be trying to put as much as you can in your favour, because it's hard enough anyway. Yeah. Once you do that, it starts to get easy. But you have to make that decision that you're going to be disciplined about it, and you're going to try and make this as easy as possible.
And if you trade it in the weekly time frame, do you use the same percent on money management, the 0.9%, or you increase it to 3, 4, 5% maybe?
No, I use the same percent.
Because it's just longer time
Well, I know. You're right. I mean, if you're trading the daily, it takes longer to make the money, simply because it's a longer, time for the result to come around. And it's like fractals, the thing where as you zoom in on a coastline, everything gets more and more detailed. So if you look at a map of Great Britain or any country or whatever, if you draw a line around the outside of the map, and it's quite a large map, but you kind of draw a line around it, you go, oh, that's 30 miles. But then when you try and walk around the coastline, you go, oh my golly, that was 90 miles. Yeah, and that's what happens when you're trading as well. So when you're trading the daily or the weekly, you're doing like the 30-mile walk, because you're missing out all the bumps. But when you're trading the smaller time frames, you're doing much further. Everything's much more. You're trading more. Your emotions are more. Everything's more. And the risk of losing is potentially higher. You can lose more because you put more trades on, but you can make more because you put more trades on. Yeah, so it's just a trade-off, really.
Understood.
Okay, so do you have any more questions on that one at the moment, Talat?
Yeah, clear.
Cool. Okay, so then the next thing you want to think about is which assets are your trading assets, and what you're after there is how you perceive its predictability, its volatility, the spreads, and the average true range, and what I call the inherent reward ratio. Okay, so and that's to do with a combination of the spread, as you'll have seen in the book, and the ATR. And if you've got a big IR, then the probability you're going to be in profit happens much quicker. Okay, everything is more in your favor if you have a big IR. And then you want to consider the gap risk thing. The gap risk is simply that what's the risk of the price jumping while you're during the trade, or when you're about to make the trade, or anything like that. And what you want is something which is not likely to jump to gap. Because if it works for you, that's great, but if it works against you, that's horrible. All right?
Yep.
So, moving on. Then which trading plan are you going to go for? What sort of thing are you going to try for? Are you going to try for trend trades? Or are you going to try for trend reversal trades? Or are you going to try for channel trades? Or are you going to try for channel reversal to mean trades? Or are you going to try for breaks of support and resistance? Or bounces between support and resistance? Or trendline support, and so on and so on and so on. I mean, there's just loads of different ways you could consider it. And because there's loads of different ways you could consider it, of course, everybody else is considering all these loads of different ways.
Right.
And because everybody else is considering all these loads of different ways, that creates the uncertainty in the market. Because, you know, if you've got some people saying, well, I'm going to trade it as it does this, and somebody else is going to trade it as it does that, then you've got people, you know, going against each other, which is the nature of the market. It's people, you know, bargaining between each other about what's going to happen. So what you've got to try and do is be right about what's going to happen. Yeah.
Yeah.
But in the way that, how to put this, also so that you're with the crowd as well. So you don't want to get caught. You want to be in favour. Now, everything I know and everything I've read says that trend is probably the best way to look.
Okay.
And so my default settings for my indicators are set up for trend. But what you'll find is when you look at particular asset classes, some asset classes will do trend quite well. And other asset classes would do something like channel reversal to mean quite well.
Okay.
So it comes down to then, you know, to understand your asset class, what it is you're going to trade. So the euro dollar will behave in a particular character. It will have its own character. You know, and the pound yen will have its own character, and the dollar yen will have its own character, and the DAX will have its own character, and so forth. So if you try and trade everything, you're not going to learn the character.
Can you tell me where to go to learn the characters of each of these? Because I've learnt a few of them just by watching them for a couple of weeks.
Yeah,
And,
absolutely.
I literally 2 weeks per pair, so I've learnt two that I'm comfortable with, one very much, and the other one I'm still working on very much.
Okay.
So I'm kind of, it'd be great if I had a shortcut, because that's just a ton of hours at all sorts of times of the day and night to see what times a trade has impact, and basically try trades out on the demo account and just learning and leaving trades to run. And where can I kind of get shortcuts to that? Because is it just a question of getting a feel for it in the same way that if I was playing basketball, I just play a ton of hours in the court and just pick it up?
I think to a large extent, yes, you have to. My indicators will help you loads because it will flag up, you know, what's going on, and you can get a really good feel for it. But you do need to put the work in, and really, even if you just traded one pair or one index or one commodity, if you really understood it, you could make your money out of that without needing to do everything else.
Agreed. One question on the detail of the profiles.
Yeah.
My profiles, I remember from the last time we talked on this, I've saved them. I've got them under like Ben's default with Darvis and Ben's default January, but the Dawn accounts, they don't stay in the same place on the platform. They move back into the top right hand corner and just pile up on top of each other.
Do they? Okay.
So whilst that's the one question, is what am I doing wrong? I put them all over across the page nicely. They just pile up back in the corner. The second problem I have is when I just go on default with Darvis, which I still put my indicators on that I want to work with, and then I go back onto it the next day, the default with Darvis is still empty and only has your Darvis but not my indicators attached. And sometimes that happens on my one, as in default with January. Sometimes I have, and all the time it just empties on Darvis, the straightforward default with Darvis. There's just nothing there.
Okay.
So I'm just kind of wondering what am I doing wrong in terms of saving the profiles, or is there just like it was just a hiccup and random and one of those minor things?
All right. Ben, what I suggest we do, if we do a one-to-one on that specific subject, then we can handle that and come back to it, afterwards.
Outside of, okay, agreed, done. It's out of the picture. Thank you.
Yeah.
By the way, thank you for this. It's excellent, the whole process. Really appreciate it.
Thanks, Ben. Cheers. Okay, Talat, how are you doing on what I've just said as well?
Great.
Well, cool. Shall I move on?
Yeah.
Okay. Right, next bit. Trading plan for the day. Okay. So whenever you've decided to trade, whether you've decided to trade like on the daily candle Talat, or whether you've decided that actually you can find the time to trade a particular session, you have to set yourself a time to start work. It's a business, right? Treat it seriously. So set yourself, set your clock. I have my smartphone tells me, hey, time to start work. Yeah, and it gives me advance warnings beforehand. I've got it set up to give me alerts beforehand. And whenever I'm agreeing to meet anybody or talking about any meetings, or I spend a lot of time doing relaxation time. But even when I'm doing relaxation time, I'll say to people, no, I can't make that. Yeah, because I set myself particular time when I'm doing the work, as it were. And when you do, you want to make sure that you're absolutely clear. You want to, ideally, you want a space which is free of other interruptions. You want to turn off your phone and make sure nobody does anything. Make sure no emails are kicking off, no Facebooky stuff is happening, no nothing's happening. All right, this is when you've gone to work, for yourself, but you've gone to work, and so everything external is shut down. I shut the door, everything's switched off. That's it. Right, now I'm working, and then you need to set time up to prepare yourself mentally, because it can be quite a mental game. And as I'm sure both of you understand, and I certainly get it, that when stuff is going against you, you need to understand exactly what you're going to do, and you need to be calm. You need to be in the zone, as it were. So after you've set your time to start work, first thing you do is get yourself in the zone mentally. Does that make sense?
Yes, yes.
Yeah, as long as you follow the management, the management money, the plan for managing money and stop losses, then there is no problem with that. I think it's totally clear. You are on the safe side mentally,
You are.
at least.
Yeah, I agree with that completely. I find that the times when I felt stress trading is the times when I've been trading with too much money on the trade, and I've been taking a risky trade. So, it's all about getting it all aligned, and to do that, it's good to do this sort of thing, having a trading plan. And then you need to time there to plan for the assets for the day. Now, if you've decided that all you're going to do, for example, is trade the pound yen, then the only thing you need to look at is the pound yen, which is brilliant. It frees you up a lot. You just, right, okay, I don't need to think about anything else. All I need to think about is the pound yen.
Yeah.
Okay, and then be very, very clear about what your strategy is and stick to it. So you look at how you particularly are going to trade it. And this goes back to the first question you had, to how do you know it's getting momentum and stuff like that. And I'll talk about that a bit later on. What I recommend strongly, especially at the beginning, but many would say that it's best to do it all the time, is take before and after screenshots of every trade you do. Okay, and I use a tool called Jing to do that because it's very flexible. It does the job nicely. And then I'll have a folder to put the screenshots into, you know, for the day or for the week or whatever, so I can go back and look at them. And then you need to give yourself time.
Can I ask a question relating to screenshots?
Yeah.
So obviously Jing screenshots done. The detail on the transaction on the account history. So we've got the trade live.
Yeah.
It moves to account history when it's closed. But if the trade
That's
live
correct.
is open, I've been trying to figure out how to copy that information off there, and I can't seem to copy it. Do you know what I mean? What I want to do is copy the trade, or wait until this account closed. I'm fine with when it's doing it's closed on the account history. Either way, copy a trade and save it into an Excel that I can then just mess with.
Okay, I got that.
How do I do that, please? Or is it not doable? Maybe may not be doable.
No, it is all completely doable. Talat, did you understand that question?
Not really. He mean to take the screenshot on later on after he finished the
Yeah.
the
It
position?
means the trade log. There's a trade log, and on that trade log, yeah, in
Okay.
MT4 it keeps complete history, and
Okay.
in my calculator you can copy that trade history into the calculator, and it gives you a complete log in there. So I will show you, Ben, later how to do that as well in the one-to-one, because what we're talking about here is how do you use MetaTrader more than with those questions than how do I trade.
Got it. Understood. Apologies.
So I'll come back to that with you one-to-one about how do you use MetaTrader, or you know, maybe even create a little video about how to do it. Okay, moving on. I've already said this stuff. Start work, block out all distractions. Okay, mental preparation. Some of the things you could do, and you may or may not like all of this, or you may decide that it's a bit, you know, whatever, but these are the things that you could do to get in the zone. One is get a clear, prepared environment. Okay, and then before you start, just spend a minute or two in complete silence, just to get yourself completely in the zone. And then you can visualize the great trade setups to make sure that you're reminding yourself on a regular basis what a great trade setup looks like for you. Okay, and I'll show you some trade setups that I screenshotted because I thought, okay, that was a great trade. That, you know, that would be a good one to get into, and I'll show you some of those. Visualize handling failed trades. So, like, if it's going against you, how are you going to handle it? Very important, that part, because many people, when a trade is going against them, panic or don't do the right thing. Now, obviously, you're quite right to that. If you've put the correct stop level on, you've got the right risk for the trade on, and you've set it up with the probabilities in your favour, then if a trade goes against you, it just goes against you, and that's that. So it's no big deal. But if there are occasions when you found yourself not handling a failing trade correctly, then having trades like that to reassess and go back and reflect on and think about, okay, how would be a better way to handle that, then it's worth learning that. So it's like any other skill. You know, whether you're playing squash or badminton or football or whatever, you know, you have a way in which when you do something you go, right, well, I hit that absolutely sweet and that was perfect, that's what I need to practice. And then there's other ones where you go, right, I completely messed up on that, and how I messed up on that was such and such, and I mustn't do that again, or what I should do is do this to correct it. All right, so it's just a process of learning. And then the other thing you can do is visualize the taking of the profits. In what way are you going to do it? How are you going to do it? Now, this may or may not be useful to you, but a lot of people find it really helpful just to go through a process like this to fully get themselves into the zone. So I don't know if that helps you as well, to that, or you, Ben.
Why not try it?
Cool.
Yes, it really is good. It's vintage Tonyar, so I guess I should have thought about that. It's really good.
Yeah, it's great way of just getting yourself all set up. Now let me see if I can find something else I was looking for. Here's if this works. Right, here we go. Here, for example, is a trade setup that it's kind of a good trade setup, and it's kind of not. But anyway, it's a trade I made money on, so I'm quite happy with it. So this is a trade I actually ended up taking, and I caught this trade there from there to about there. Okay. So that was, as far as I'm concerned, that was a good trade.
Yeah,
now, what's interesting about that, for a number of things, is this is the pound dollar, okay, and it's the 30-minute candle. All right, and that's 30-minute is less noisy, and you can be more calm about taking a trade like that. And what's also interesting about it is that the time when all of those kicked off down here was on the 7:30 candle, which means it closed at 8 o'clock. So that 8 o'clock there is the UK London market open. And the volume, as you can see here, the volumes are all light through here, and then they suddenly spike up here. Yeah, and they're beginning to build there. And there's volume here overnight there.
The moment they spike, it's gone already.
Sorry?
The moment they spike, it's gone already for me.
It's gone, that's right.
It's gone.
It's building here, Talat. Look, it's building. It's higher than that level. It's got a bit more coming into it there. Now, my indicators are going to say, right, we're ready to go. We're ready to go. We're ready to go. We're ready to go. This one here, the bull bear butterfly line, is above the zero line. It's close to the green line. We're all ready to go. Okay, so I got all that lot there. I got the setup there with these alerts kicking off, and I set that trade, and off it went. So I was very happy. Yeah. Yeah.
0.9% of the money.
And 0.9. That's right. My stop was about there.
So you put your stop loss first and see how much it costs. Then based on that, you put your lot size.
Yeah. You have your entry price here. You have your stop price here. You know what that is in pips, so you can work out what your lot size is. And then you can just trade for that.
So you had about a 25 pip stop loss, trading loss?
I think less than that. I think it was about 10 pips. That's 1.2513, that's 1.2503, so about 10 pips.
Okay, do you have a preference as to how much your trading losses or stop losses?
No, it depends on the asset.
Any general rules you follow?
Generally speaking, I also put on the chart as the ATR 10, and that says here it's 17.
So you multiply it by 1,000?
So that 0.0017 is in the same value as the pips here. 1.2503. All right, so 17 is 17 pips.
So the last digit number is just micro pip. It's not pip.
That's
Because
right,
it's
but
330. Yeah.
this is the very micro pip is after the 17. So on here, the 1.2503 are pips, and the 0 is a fraction of a pip.
Is a fraction of, because in the Japanese candle it's supposed to be 2 only or 3. When you use Japanese,
they describe it differently. That's correct. They describe it differently. Okay, but on the pound dollar, this is how it's described.
Okay. Yes.
Yeah, and for me that was a great trade, because it was in the beginning of the day, in the morning. What I'm looking to do is catch the opening momentum, while everybody comes in and jumps on it and starts to move the market.
Yep. Just highlight one thing: the ATR, the ATR now it's 17, but at the point when it was the small candlestick before it break out, what was the ATR at that moment?
That ATR was bigger. Right here at the time, the ATR was smaller, so the ATR would be a lot smaller value. It looks like Neil's managed to join us as well.
So you put your stop loss based on the small ATR or just the previous day ATR? Because in the book you mentioned that you have some sort of a range. So you take the maximum of the previous day and the minimum of the previous day, and based on it you put your stop loss?
Good question. For this particular trade, what I'm interested in is the ATR on this time frame.
Okay,
so I am interested in the ATR for the day, because the ATR for the day gives you an idea about how far it might move altogether in the day. All right, so this is about room for the trade, and that's that's another complete subject really. But this part is about the ATR for this time frame, which gives you the average true range for what's going on now. And you're quite right, when you move into this, the ATR through this period here, in there, is likely to be somewhat smaller until it bashes out like that. And I can't remember what it was, but it's probably something like 10 or 12 pips at that time. So my starting stop was there. I think I shoved a trailing stop on this one. And if I can't remember, I haven't got the log in front of me. But at that point there, the two strategies I do with this. One is I take the alert, and the alert gives me various targets like T1, T2, T3, T4, T5. And if I'm feeling aggressive, I'll put T5 as my target, put my stop on it, put my entry. So I've got an entry price, got my stop, put my T5. My T5 is, let's say, somewhere around there. Okay. And I'll put my target 5, and then I'll just leave it and go away. Other things I might do is not put the T5 on it, and put the trade on, and put the trail on of the same distance that I started with that stop. So I'll refer to the stop that the alert's given me, and I'll take that. Yeah.
May I ask, please?
Yes, of course.
I hear that. Question: you obviously went in at M30 on this.
Yeah.
My question is: you see the opportunity on M30. You wait for the second candle. You got your starting point. But did you do a trade on M1 to get it accurate, or did you just go to M30 and go, "What the heck? I'll just take it on this"?
When I trade like this, I always trade just the M30.
So when I look at the M1 for the time frame, obviously relating to the M30, I can see obviously volatility compared to that. So I'm just wondering, obviously, what would you be considering at that moment? Is you're not going to worry about that? You just go for the moment?
I don't zoom in at a smaller time frame. I know a lot of people do. They go down to something like the 5 minute or whatever. I take my trade alert and I put it on the basis of that. I look up the setup and I don't go down to a smaller time frame. And I find for the most part that works pretty well. There are times when it might have been better to go to a smaller time frame, but in practice I find for the most part I don't need to.
Acknowledge. Okay.
Why you didn't take the trade in 5:30? Because the all indicators come up, the butterfly one is up, everything looks nice.
Sorry, Talat, can you say that again?
Yeah, why you didn't take the trade at 5:30? Because all the indicators indicating up.
Yeah, good question. Really brilliant question. Like it. Very good. That's an excellent question. Okay, I'll tell you why.
I agree, it's not the favorite time of the day, but it's
there you are.
Excellent trading setting.
There you are. There's a number of reasons. One is it's not a great time of day, and you're quite right about that. Now you are right as well. Look, we've got this popping up. I mean, they're all saying we're good to go.
Yeah.
Yeah, all good to go, and that is up at the top there near the green line. Good to go, no question. Yeah, supreme. Now this particular, my software gives a trade alert that basically will flag that up if you set it up to track these conditions. Okay, so if it had triggered that trade alert, which it probably did, what it will then do is say get in on a buy stop order. All right, so the premise is we've got momentum. And that candle looks like a really strong momentum candle, no question about that. Yeah. So the premise is we've got momentum. Now the question is, will it follow through?
Yeah.
Okay. And so the trade alert will come up with a buy stop order. It will say buy it if it breaks above this level. Now this level is slightly above the close of the candle. So it needs to be a bull candle if you set it up that way, or you can say I don't care about whether it is or not. But if it's a bull candle and whatever, you set up all the settings so that it says right, this is what I'm interested in. Then it will say give me a trade entry for a tiny bit above where the close was, where I got this alert. Because if the momentum follows through, and the proposition is that it will, then I want to get in the trade. However, if this is wrong and it's not going up, actually, after all, then I don't want to get in the trade. Okay, so on this candle, going to this one, on this candle, the trade entry was, see, there's the close. The trade entry was here somewhere. So if it all it had done was go that way, you would not be in the trade. So you get in the trade because it's a buy stop order at that level. So if it starts to go that way, you're in. If it doesn't, you're not. So going back to this question, which you absolutely brilliant question. There's the close. So my entry would be about there. And my stop would be I don't know, somewhere here, perhaps. Okay, and at this point here, this candle, all it did was go down. So you didn't get in on the trade at all. No trade.
Yeah.
So everything was set up. It all looked fabulous. It all looked great, but no trade because the alerts have said don't do it.
I just realised something about the trade there. You actually didn't set it up on the new order that has an instantaneous buy point. You made your own point at which you buy.
The trade alert.
Is that correct?
Yeah, the trade alert says it's a buy order at a certain level. So if it doesn't hit that level, you don't buy it. Okay.
Yep, got it. Of course. Yep.
So it's just a trade suggestion. Of course, you can discount all of these. You can just say, I don't care, it's not hit that level, I'll do it. Okay,
That
that's
totally solves
completely,
the problem for me.
that's completely valid response, whatever. Because all I'm doing is creating trading alerts that says here's a trade suggestion.
Really appreciate that. That's helped me solve a problem I was having. So yep, that's great.
It's always down to you at the end of the day whether you take the trade. All it's doing is giving you the trade suggestions and trying to give you the probabilities. So there you go. So if it, I mean, this one here is saying get in if it goes above there. It didn't. That's that. This one here says get in if you get above there. It did. That's that. Yeah. The other interesting thing about this is I've got these lines on here. I call them the Darvas lines, Cato Darvas lines. I've written some code that basically finds support and resistance levels, fairly straightforward sort of stuff. But what it does, it gives you an idea about which way things are moving. So here we've got a break through the Darvas support line there. And you'll find that this is like breakout trading, momentum through a support. Now sometimes it will go up and try and hit, like this line's got one there. This one ends up nearly getting to that point. So the price was going up strongly, then just rejected and then started coming back down again, yeah? Mm-hmm. So these lines here are quite interesting support and resistance lines. So we hit, this extends out to there, and finally we get up a new low there, and then later we get a new high there. So now this area defines our trading range for the multiple sets of candles. Okay, which is different from the average trading range, but it tells us where we are, where it's ranging at the moment. And then quite interestingly, this gets set up as a new low. And that is a higher low than this one, which gives us perhaps a little bit more before, and not this candle, because this candle, that low's still there. But by the time we get round to this candle, this low's here. So now we've got a higher low, which gives us perhaps a bit more belief that the movement might be going back up again. And what supports that as well is the fact that that's the zero line on the bull bear butterfly. So the bull bear butterfly line, this blue one, is above zero, close to the +9, and +9 is approximately the level at which we've got a follow through in terms of trend. Okay. Mm-hmm. So the reason why I felt more comfortable taking that trade was because of the time of day, because of the increasing volumes, because of the way it's set up, because of the bull butterfly, because we've got all these alerts now, all the ducks in a row saying we're going up. So there we are, we're at this level here, which without the indicators you might be hard pushed to believe it's going up. But with the indicators you go, okay, I get that. And I've got this here with a new higher low, which basically that is now our new support level. There's a potential turnaround. And if you look at the structure of this, you've got something like this going on, okay? And then the potential to blow through that line there. But by taking the trade alert, you get in on the trade a little bit earlier with a tighter stop, which means you can trade with a bigger size, with a bigger lot size. Which means that, you know, when you go up, you break through that lot, you get up here, the reward you've got is what, on that particular trade, probably something like 3 to 1, maybe a bit more, who knows. Fabulous trade. You only need one trade like that in a week. Okay, if that's 0.9% in there. Yeah. So that risk is 0.9%. That one trade, if it gives you 3 times as much, let's say, or at that level there, more, you're talking about nearly 3% off that one trade. If you're not greedy, you've just done for the week.
Yeah.
Yeah? job done. Got my 3% for the week. You know, my goal, going back to what we were talking about goals earlier, setting goals and your intentions. If your goal is to make 1% a week, which some people say is not much, but let's face it, in the bank you can get 1% in a year.
Yeah.
Yeah. And 1% a week compounded works out around 70% a year. So that one trade, you know, job done. I've done one trade, that's it. I don't need to do anything else now this week.
Sounds good to me.
Okay, so that's
Yeah.
anyway. That's my mindset on it. Sorry to that.
I need 3% at least per week.
Yeah. But start small. Start careful. Right. Don't go over trading. Just be gentle with yourself. Yeah. Don't give yourself any stress, mate. It just, you know, be gentle with yourself. Be calm.
Yeah.
You know.
Yeah.
And get a feel for it. Get an understanding. And yeah, that's all I can say is don't push yourself too hard. If it's like anything else, if you push yourself too hard, you'll end up making mistakes. If you take it nice and easy and gentle, get the feel, get the learning.
Yeah.
Okay. So guys, I've just noticed on the clock we've done quite a lot of time. So I hope you don't mind. I'm planning to cut this webinar short, but I will start another one up where this one left off if you're interested.
This has been great for me. I've really appreciated, John. You know, I absolutely love this.
Thank you.
Gold to me. The mental preparation, really, totally. How many times I've been on seminars, and that's such an obvious thing. I've not actually done this with this related project. Absolutely clear. Really appreciate it.
Okay.
Great. You're a superstar. Thank you very much for your time today, John. Awesome, as always.
Okay. So that's a pleasure. And I'll set up another webinar, which basically the same kind of stuff, but I'll carry on through it. I know Neil had questions, some of which I may have answered. I don't know, but certainly I've answered. I think I've answered quite a number of questions today, but I'll carry on answering the rest of them on another webinar. Yeah. And in terms of getting the software, the release will be towards the end of this month. So I'll let you know about that. Okay.
Is it possible to have before that as much as you can? As much as you can. At least to play with him in the
I'll let you know as soon as I got the new release coming out.
Thank you very much for your time. Thank you.
All right, sure thing.
So.
Okay, so I'm going to wish you well and wish you good night and happy trading.
You too. Have a good night.
Okay.
Thank you. Good night.
Good night.